What's up, guys? Today I want to show you a trading algorithm that I've developed for my flagship strategy, which is the new post earnings high. And I want to show you this to prove that I'm not just completely full of shit and this does actually work. So, what you're looking at here is an application called Quaint Terminal, and that's what I've used to write all the code for this strategy. And what I do here is I use the earnings winner scanner to build a watch list, and I capture like the date that I added that to the list and the earnings date. And then I feed that list into this platform, and the code that I've written um, ingests that list and does a whole bunch of different calculations and stuff like that to get the risk and make sure it's not buying like before I added it to the list and all that kind of stuff. So it's pretty accurate, and I just want to show you how it's been performing over the last 6 months or so. So what we see here is we're on the performance tab of this application. I've already run this back test, and I'm comparing my strategy to a buy and hold benchmark using the S&P 500. So this is a summary of what your performance would look like if you were starting with an account balance of 25K and just bought and held the S&P 500 for the last 6 months or so. And I have this pinned to the first date that my trading algorithm would generate a trade, so I could have a really accurate comparison. So buying and holding the S&P 500 over the last 6 months has been a really good idea for most people. You're looking at a 22, almost a 23% net profit, which is fantastic. That's a phenomenal return, especially considering you just buy once and forget about it, right? You never have to look at this again. There's no other work required outside of the first initial investment. That being said, that's kind of scary, just dumping in your entire account balance into the S&P 500. But for most people, especially long-term investors, that's what you want to do. So another option, at least for me, is to write my own trading algorithm. So let's take a look at the performance for my strategy. And as we refresh, so this one, we're starting out with 25K, and we had the same starting date and ending date as S&P 500 buy and hold strategy. But this one is returning 70% net profit. So on that 25K that we started out with, we made almost $18,000 for an ending balance of almost 43K. So this is a little more than 10% per month, which is a fantastic, fantastic return. So let's take a look at our profits as it's distributed. Let's look at the monthly view of this and see what that looks like. So it's mostly green. We had our first red month in March, where we only lost $200, so no big deal. But other than that, it's been green pretty much since I started running this strategy Q4 last year. You've got it 3K, 3K, 4K, almost 3K. So pretty consistent profits here. So this tells me that I'm definitely onto something. I mean, I've been trading this strategy for a long time. I mean, close to 10 years. But it's just been over the last couple of years that I've really started to fine tune this thing, put in some meaningful risk management and position sizing, and have really fine tuned it and started writing these trading algorithms so I can get this kind of data. And I also use this to capture a whole bunch of characteristics for a stock on like earnings day and the day that it traded, so I can do some performance and kind of improve my strategy that way as well, in addition to the way that I pick my stocks. So let's Let's look at some charts and let's see what this actually looks like. So here's a chart, and I have CELH selected. This was a trade that was executed back in Q4 2020. And just to show you what this is doing, right here on 11/12, this was earnings day. So we had this big green candle. And what this strategy is going to look for is a new high for the day. So this strategy runs once per day at the end of the day after the close. So it's going to look for, was there a new high that was put in? Was there a new post earnings high made today? And did the stock close the day above that earnings day high or post earnings high, right? I don't necessarily care if it put in a new post earnings high, but then pulled back and sold off and closed below that level. I don't care about that. It has to both put in a new post earnings high and close above whatever that previous post earnings high was. And then if those conditions are met, along with some other optimization parameters that I have in there, it enters a good till canceled limit order to be filled the next day. So it just throws out an order at whatever the closing price was, and it'll get filled the next day. So if we kind of step through this, we have earnings day here. The high was 32.75. The next day high was 32.75, but it actually closed at 32.58. So it didn't consider that for an entry. But then the next day, it put in both a new post earnings high and a new closing high. So at that point, it triggered the order. It got filled the next day. And then in this case, it just kind of consolidated. I mean, it had a little pullback here, but I mean, really didn't do a whole lot for quite a while. I mean, we're looking at intraday on 11/17, and then it actually started breaking out a month later. So these can take quite a while to develop and play out, but that's part of the great thing about this strategy. You don't have to be glued to your screen. Like, I could use this as a scanner and just check this every night, enter my orders manually, and just be done with it. And that might be something that I'd be willing to offer to subscribers down the road. We'll just have to see how that works out. But you can see that it's scaling out. So it sold a third here at 40.58, sold another third at 45.10, and then finally sold the rest at 52.67. And this ended up running up to $70. So with an initial entry price at $33, and it running up to 70, this was a really, really good look. And I'm really happy with the way that it has scaled out in chunks. And we really caught the meat of this entire post earnings move here. So this is a really good example of what this strategy looks like. And let me show you a current example. I have one open. Actually, I have quite a few open positions, but let me show you one of these. Let's take a look at PTMN, if it will let me select it. Let me find it over here in this list. Okay, here we go. So PTMN earnings day was right here on the 12th. It had this nice pop. Couldn't put in a high and just kind of consolidated for a little bit. And then you can see here, it started to break out, put in a new high and closed above the previous high. So that triggered the order. It got filled the next day. And then we had this really nice pop on the 7th here, and ended up selling out a little bit of the position here, sold 928 shares. And now it's just consolidating a little more. And the beautiful thing about this is now that this first price target has been reached, it's now risking on break even. So even if this rolls over and comes all the way back and doesn't keep going, I will not lose money on this trade. I've already locked in some money here, and it'll stop out without generating any losses. So worst case scenario here is I make some money and break even. So I'm loving this strategy. I'll check in with you guys and show you the progress on how this is running as we progress through the quarter.